What's up, Miami? Welcome to another episode of Real Talk 305. I'm your host, Raul Crespo, and today we're going to be talking about how is the real estate market in Miami
September
2021. Stay tuned. All right, guys, let's dive right into it. I'm going to go ahead and share my screen so we can look at a couple of data points together. Let's see here. All right. So we're going to talk about first what's happening with single family homes and then what's happening with condos. A little bit of a different market for each. So with single family homes right now, we've seen that obviously over the last year, inventory has dropped off from about April of 2020 till now. There's been some slight fluctuations here and there, but I think from what I'm seeing in the trends, we have to wait and see this month and the following how it pans out, but I'm seeing that there's an upward trend of inventory, what we call months of inventory in the single family home market. And what that means is, as for a frame of reference, if you have 6 months of inventory, that's what you would call a neutral market. Neutral markets barely ever last long. Once you have more than 6 months of inventory, it's considered a buyer's market. So prices are expected to either kind of stay the same or go down a little bit. And it's obviously better for buyers. That's why they call it a buyer's market, easier to find deals. And when you have less than 6 months of inventory, it's what you would call a seller's market. So as you would guess, the seller's market means that sellers are going to have the advantage. Prices will tend to go up. There's more competition. We're seeing multiple offers, as you all are, I'm sure, are well aware. So we're still deep into that seller's market, even with this uptrend in monthly inventory. But I think that it's possible we may start to see things climb up a bit. I don't think, in my personal opinion, that we're going to go into a buyer's market anytime soon, but at least the seller's market could ease off, pump the brakes, if you will, a little bit. Now let's move on to the next ones here. This is just another way of looking at it. The number of active listings for single family homes on a month-to-month basis. You can see just from July of last year, 2020, we had just shy of 6,000. And we are now a little bit south of 4,000, where I think it's like 3,900 active listings in the month of August, which is still very, very low. And I'm seeing still that kind of downward trend. But again, because of the month of inventory, I think that we're going to start to see houses staying on the market a little bit longer, maybe a little bit less competition, even though there's still less active listings on the market. Now we're going to move over to the median sale price, which is all a very important statistic for all of us. We've seen it steadily go up for single family homes in the last couple of years, especially in the last year and a half. And again, you can kind of see it's not very defined yet, but I think you can start to see a little bit of a curve, a declining curve on that chart. So hopefully that means things are going to ease up a little bit. I don't see prices declining anytime soon. I don't see depreciating prices anytime soon, but I do think that maybe that level of appreciation is going to kind of soften a little bit over the next couple of months. Miami is one of the hottest markets in the country right now. And Florida as a state is one of the hottest states in the country because of the fact that we don't have any income taxes. So we've got the big exodus of people from New York and California moving over here, which has been causing us to be a little bit behind the curve as far as things slowing down, because we are seeing that nationwide. But as you'll see, Miami is still pretty crazy. So now let's move into the condo market. This is pretty interesting. So up until about the beginning of the pandemic, the condo market in Miami was in a very deep buyer's market. I mean, you couldn't give away condos fast enough. You can see here, remember I said 6 months of inventory was what you would consider a neutral market. Anything above that is a buyer's market. We were at 25 months of inventory in May of 2020, even a few months already into the pandemic. You can see after that, it steeply started to drop off. From there, we went to, still north of 12 months of inventory all the way into December of 2020, where we saw the first dip into single digits, not even a buyer's market yet, just single digits. And then, since the beginning of this year, we've seen a continuation of a downtrend of the number of months of condo inventory on the market. And that's because it's just so darn hard to find a place to live right now. So people are resorting to, hey, maybe we wanted a single family home, but let's get a condo instead, a 2 or 3 bedroom condo. And we'll get that for now. That way we're still homeowners, but we are not getting the single family home that we may have wanted. So now in the last I would say 5 or 6 months, we are seeing that the condo market in Miami, after all these years, has gone into a seller's market. It's not a super heavy seller's market. As you can see, it's kind of uptrended a little bit in the month of August, but we're still below 6 months of inventory for condos. So very crazy to see that. That's how saturated the market is. People are resorting to that instead of single family homes. Let's take a look at the next slide here. As you can see, since, just about, like I said, November, December of 2020 up till now, we've seen a steep decline in the number of active condo listings on the market at the moment. And that's for the same reason that I was telling you before. And here we can see again, as of about December of last year, we've seen the prices of condos kind of skyrocket a bit, from an average of about 250,000 now skirting 350. That's what, a 30% or so increase in just a few months. So pretty crazy what's happening in Miami. So that's it for this presentation. But let's talk about interest rates right now, because I know that's important to a lot of you. In case you didn't know this, mortgage rates, the 30-year fixed mortgage rate in the United States is very, very closely tied to the 10-year yield treasury bonds. So let's take a look first at the treasury bonds. They're at 12.95 right now. If you look closely, this is the 5-year trend. So take a look at the shape of this chart here. And now I'm going to show you the 30-year fixed rate in the last 5 years. And look at that. It is almost a mirror image. In fact, let me see if I can get these next to each other for you, so you can take a look at what they look like side by side and just how similar they actually are. And take a look at that. I mean, this is obviously a little bit steeper because it's, it's stretched out, but the overall trend is exactly the same. You see, it kind of dips up here. They've got the same peak, and it sort of dips a little bit, peaks again right around the end of 2018, going into 2019. And then we saw obviously the beginning of the pandemic in 2020. They have it highlighted here, and it's gone down. This has gone down, and now it's kind of picking back up here. Get the rest of the chart, peaking back up here, but then it dropped off again. So interest rates, interestingly enough, now let's look at it from a 1-year trend, year to date. We've seen that they kind of the yield, the 10-year yield went up a bit, and now it's kind of been slowly coasting back down, which is good. That means interest rates are going to continue to remain low. The Fed has already said that they're not going to be raising the interest rates for another couple of years. That does affect it. So that's just a little bit of info on interest rates right now. If that was a bit heady for you guys, just know that, it's not too late to get less than 3% interest rates. In fact, let me give you a number right now for the month of August. It's pretty small there, but it's less than 3%, 2.87% as of August 26th, 2021. So pretty great stuff there. Another thing I really wanted to talk about today was an interesting article that I read about the Biden administration and their plans for affordable housing in the United States. I mean, the information that I've shared with you today should make it no surprise that housing affordability is at basically an all-time low in this country, and the Biden administration is looking to help alleviate some of that. So let's look at some of these numbers here. So the S&P CoreLogic Chase Shiller 20-city home price index, which is basically just a way of seeing home prices from like 20 of the major cities in the country, rose a record 19.1% from just a year ago. The housing as a share of the population plummeted by close to 40%. The current shortage of homes is close to 3.8 million, according to researchers at Freddie Mac, a substantial increase from the estimated 2.5 million in 2018. So we're 3.8 million houses short compared to the people who need housing in the country. Obviously, that's crazy. More than 10 million renters nationwide, or roughly 25% of the total renters, pay more than half of their income on rent. And nearly half of them, about 47%, spend more than the recommended 30% on rent and utilities. That's really heavy. That means that housing is taking up an even larger portion of our income than it has in previous years. I know that the Biden administration is looking to increase the supply of both single-family homes and multifamily housing units over the course of the next several years. So they're going to do a lot of things. They're planning on constructing and rehabilitating rental housing units with federal subsidies. They're expanding and strengthening low-income housing tax credit. They're offering tax credits to those who build and rehabilitate homes for low and middle-income home buyers and homeowners. And they're incentivizing the removal of exclusionary zoning and harmful land use policies. So basically, they're trying to make affordable housing more accessible. They're going to be making it easier to access loans for people who want to buy what we call residential multifamily properties. That's a duplex, a triplex, or a fourplex. These are multifamily properties that you can actually buy using owner-occupied loans. They don't have to be investment loans because they're still considered residential. Really interesting stuff. I'm interested to see how this pans out in the next couple of years, what the Biden administration is actually able to pass, and what that's going to look like. I mean, I think we're going to see a lot more multifamily homes coming on the market, a lot more people investing in multifamily homes. And hopefully we'll see a lot more affordable housing, coming into Miami, Florida. One thing I personally have always wanted to see happen in Miami is an influx of tiny homes. I think tiny homes are incredible, especially for, young professionals or young couples who are just trying to get their first property and become homeowners. I mean, these are amazing little architectural phenomena that just take up a very, very small footprint. They're very, very low cost to build. And I think they could be a great starting point for a lot of us people who want to enter the homeowner space. So gonna look up some more information about that. Maybe next month I'll try to get some info for you on tiny house legislation in South Florida. But for now, that's about it. I know this is kind of a heady topic. Everything was pretty analytics and numbers based, but the big picture that I want to take away from this, that I want you to take away from this as the viewer, is that while the market is very crazy right now, we're starting to see things change. We're starting to see things maybe starting to slow down a bit in the Miami real estate market. And hopefully with what the Biden administration is planning, we will start to see even more opportunities for affordable housing in South Florida. But that's all I've got for you for now. If you have any questions for me, please leave a comment below. I'm going to link to a couple of other videos that I think would be interesting as far as investing in real estate and stuff like that for you to check out. And you can expect one of these every month. I'll do a monthly market report at the second week of the month from here on out. So thanks for tuning in, and thank you for watching another episode of Real Talk 305. Have a good one.